As far as I can tell, this is the last week on pattern recognition training. Unless, of course, I think of something else between now and next Wednesday. Hi, this is Tim from TradingStrategyGuides.com. Today we're going to look at the last of the patterns, the rising wedge and the falling wedge. Well, at least I hope they're the last of the patterns. Hopefully I haven't missed anything. I've also got a setup on the Great British Pound Canadian Dollar Forex pair today. Let me know in the comments what you'd like to see me do an analysis on. I just want to make sure that I share the setups that make you guys the happiest. I'm also going to look at our open trades and the new setup, and then we'll take a look at the wedge patterns. And remember to click the subscribe button and hit that bell so you don't miss any of our trading goodness. Let's take a look at the open trades. I mentioned the other day that crude had broken above the triangle, and I was going to watch it for a few days and see what happened. I'm pretty sure this thing has blown this pattern, but I don't know. It's down here retesting this line. So I'm still going to watch this for a couple of more days, but I think this particular pattern is done. I can't really justify redrawing the line to include these candles right here. So I think this pattern is blown. We still have this strong support level though, so we just need to keep an eye on this market for a while and see what happens. Here's the S&P E-mini futures daily chart. We got into this a few days ago right here at 29.72. It stayed positive for most of the time, and it's pushing up nicely today. So hopefully this thing will keep on going and hit our target shortly. Still sticking around in this one. So Cinemark closed outside of our original triangle right here. The dash line is our original triangle. I took that, and quite honestly, I was not around yesterday afternoon, and I missed this close back into the triangle. So now we've got a new push up. I'm going to wait and see where it closes today. If it closes back inside this new triangle, which I've drawn to include this candle from a couple of days ago where the entry was. If it closes inside that consolidation, I will close the position that I've got that I opened a couple of days ago. Then we'll see if it'll give us a close above this new line right here to get in. I'm still happy with taking a close below the triangle. Okay, yesterday our Apple setup finally triggered with a close just 20 cents above the ascending triangle. But it's pushed up nicely today, and it just hit our target just a few minutes ago. So I have closed half of the trade at 221.39 for a profit of about 4.65, I think. And I will be moving this stop loss up to break even on the second half, and we'll see if we can get a little bit more out of this. As you may have heard, Apple announced the new iPhones yesterday, so it's been really good for the market today. And here's our new setup for today on the Great British Pound Canadian Dollar. This is a daily chart, of course, as usual. We have a trend continuation triangle right here. It's not symmetrical, but it's not required. You know, we all love symmetry and beauty, but remember I told you that it's not required for an effective pattern. Continuation triangle requires an incoming trend. Got a nice incoming downtrend right here. I also like to see declining volume and volatility. Well, you can see the instantaneous volume has declined here. Average volume seems like it might be starting to catch up right here. And the volatility, which of course is lagging by 14 days, has just started to catch up here. And here's our trade plan. We will buy a daily close above the triangle or sell a daily close below the triangle. On the breaking candle to enter a full-size position, I want to see this volume bar reach up here to the average volume. If it doesn't quite reach the average volume but does reach at least 75% of the average volume, I'll open a half-size position to reduce risk. You can calculate the percentage by taking this volume number right here, dividing it by the volume average right here. You should get 0.75 on your calculator. If you don't get that, don't enter the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. That means on the breaking candle you want to look over here at the ATR, or average true range, which is simply the average length of the last 14 bars. Look at this number right here, multiply it by 1.5, and put your stop loss that distance behind your entry, not behind the triangle line. You want to measure your stop loss and your take profit from the actual entry of your trade. If after entering the trade you get it closed back inside the triangle, then we'll take the loss right then and not wait for it to hit the stop loss. Our intention is that a breakout from these patterns should be explosive and hit our target fairly quickly, kind of like Apple did today. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. That's how we keep our losses small. When the price hits our first target, we'll close half the position for profit and set the stop loss to break even on the remainder. We will then follow stops as price moves in our direction until the market takes us out. Typically, I do this by using 2 positions. The first position has a hard stop loss and a hard take profit at the appropriate prices. The second position will have a hard stop loss and no take profit directly associated with it. And that is our pound CAD setup for today. It's time for us to talk about wedgies. Did I say wedgies? We're going to talk about falling and rising wedges today. In part 1, we looked at the descending and ascending triangles, and in part 2, we looked at the bullish and bearish continuation triangle. And then a couple of weeks ago, part 3, we looked at the bull flag and the bear flag, and then last week we took a look at the trading range. This week we're going to take a look at the bullish falling wedge and the bearish rising wedge. The bullish falling wedge is simply a triangle pattern, but both lines are sort of like a downtrend. It requires a trend into the pattern, and then what you have is similar to a bull flag, except that it's not falling in a parallel channel, it's falling in a wedge shape. The falling wedge is considered a bullish pattern, and I will only take a break of the upper side or break to the upside of the falling wedge. And its sister pattern is the bearish rising wedge. And this, of course, is just the opposite. It requires a downtrend into the pattern, and then the price pulls back, but it doesn't pull back like a bear flag in the form of a parallel channel. It pulls back in the form of a triangle or a narrowing channel. And again, this is called a bearish rising wedge, or just a rising wedge sometimes, but it's considered bearish, and I will only take a break to the downside from a rising wedge. Now, these patterns don't happen very often, so I'm not going to spend a whole lot of time on them. They're also a little bit harder to see, but I found a couple of examples that I can show you, and I'm sure you'll be seeing some in my trading and my analysis videos in the future. The first example is on the Disney daily chart. We actually traded a rising wedge on Disney, I believe, a few months ago. I'd have to check back in the videos to see. But in this case, it looks like it's made a nice rising wedge that broke to the downside and probably would have hit our first target without any problem here. The pattern includes declining volume and declining volatility. I love to see that in a consolidation because it indicates trader boredom with the pattern, and the more of a decline in volume and volatility you get, I believe the more explosive the breakout from the pattern will be. My second example is on a daily Boeing chart. This pattern was back in June and July. As you can see, we did not get the declining volume that I would hope to see in a pattern, but this pattern did not really mature before it broke. This pattern, you can see, broke right maybe halfway through the pattern. As with most triangle patterns, I would expect them to break 2/3 to 3/4 of the way up the pattern, and in this case it didn't quite mature. So I think there was a little bit of volume drop off right in here, the volume average did not catch up. There was some drop off in the volatility during the course of this pattern, but that kind of went away when these candles appeared. So I don't think this pattern was mature when it broke. Patterns sometimes will break early, particularly due to news events. But when a pattern matures properly, like the Disney pattern did, I think you'll see a good decline in volume and volatility during the course of the pattern. Now, to be honest with you, these are the only two wedge patterns that I could find on recent chart, but I will keep watching for them as I do my analysis videos, and if I find a good wedge pattern, I'll bring it to your attention then. Remember that these patterns are never perfect. A line is never just a line, it's always a zone. There will always be candles that push through, don't quite reach the line, whatever, but if they're close, I consider it a test of the line. If you look for perfection every time, you're not going to find many of these patterns, especially these wedge patterns. When I draw lines for patterns on the daily chart, I typically try to contain all the candle bodies, but I don't worry about containing all the wicks. And that's the reason why I look for daily closes outside of the patterns for a trigger, and I won't just simply take a break of the pattern, because those things happen all the time. And if we wait for a close outside of the pattern, it's less likely that we will be caught in a head fake. Like I've said in just about every one of these pattern training videos, you need to pore over hundreds of charts looking for these patterns. Look for them on all time frames, on all markets. These patterns, maybe not the wedge, but most of the patterns happen frequently. Just remember, they're rarely going to be perfect. After you've looked at a bunch of charts, drawn a bunch of lines, these patterns will start jumping out at you and you'll see them everywhere. And there you go. That brings me to today's maxim. Got a brand new one today, and this one Casey gave me yesterday. And I can't believe I've never actually added this quote to my maxims. A maxim is a general truth, fundamental principle, a rule of conduct, or proverbial saying. These maxims come from all kinds of sources, including Casey. The purpose of my maxims is to motivate me to discipline. Discipline not only in trading, but in life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure that you always do the right thing. Feel free to borrow from my list. And today's brand new maxim. Tim's Trading Maxim number 61. Long-term consistency trumps short-term intensity. Bruce Lee. I love Bruce Lee. Please say I don't have to tell you who Bruce Lee is. Just in case you're a time traveler from the year 1872, not 1873, only 1872, Bruce Lee was a world-renowned martial artist and actor. He was also a very wise man. As with most of my maxims, this applies to more than just trading. I apply this to just about every area of my life. A few weeks ago, I gave you another maxim about the importance of consistency. Do something over and over and over, and it becomes habit. And at least for me, once something is a habit, then I won't forget to do it. Ever. Well, almost ever. Unless someone disrupts my routine. Wow, I never thought of myself as someone who had a routine. Anyway, you learn more about yourself as time goes on, and it does make life much easier. But I digress. Short-term intensity is great, but be sure it doesn't cause you to falter in your consistency. And remember our Great British Pound Canadian Dollar trade plan. We're going to buy on a daily candle close above the triangle and sell on a daily candle close below the triangle. If the volume is not quite average, go half size, as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to check out the trade management video that I've got linked below for more details. And while you're at it, go sign up for my free Trading Picks email list to be sure you don't miss any of them. I'll be sending out about 3 or 4 trading picks a week, everything from stocks to futures to cryptos to Forex, and you'll get to see them first. Plus, you'll get first notifications of anything special that's happening. And the best thing is, it's free. I'll put the link below the video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday and Friday for my analysis videos, and Wednesday for my training videos, which will most likely include a trade setup like today. I have a new plan. I'm going to try to consistently, yep, there's that word again, consistently release my videos at 3 p.m. U.S. Eastern Time on Monday, Wednesday, and Friday. except this week. How do you like that? I make a rule and then I already violate it. But my Friday video will be out tomorrow afternoon or Thursday afternoon because I'm leaving town tomorrow afternoon. And I'm pretty sure someone from Trading Strategy Guides will be doing my Monday video. So, starting Wednesday of next week, my videos will be released at 3 p.m. U.S. Eastern Time, barring unforeseen circumstance. Thanks for all the input you guys are giving me. I appreciate it. I like to hear back from you guys. Continue to let me know what things are bugging you about your trading or about my trading. I'm glad to explain anything you guys want me to explain. Just let me know what you're thinking. And next week, I'll be picking another topic for our Wednesday training because we're finally done with the pattern recognition, at least the patterns that I trade. Also, follow me on Twitter. I'll put my Twitter link below. Tell your friends about us and help us make this the best trading channel on the internet. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have a great remainder of your week, and I will see you next time.